Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with a breakdown of the action in today's session, where we did see losses to kick off this shortened holiday week, with the NASDAQ taking the biggest hit today, Justin. And we're also going to take a look underneath the surface because that was pretty telling as well.
Yeah, still some volatility in the growth area. A lot of defensive names still doing well. We'll kind of take a look at a few, such as, Archer Daniels Midland, a food stock. Also industrial stocks that are looking a little bit better. RBC Bearings, among those that we'll talk about today. And also on the travel side, Clear Secure.
Okay, we're going to talk about you. Because when's it not about you? Just
Yes,
kidding.
exactly.
YOU being the ticker for Clear Secure. All right, we'll get to those stocks, but first let's take a look at the major indexes today. So as I mentioned, the NASDAQ taking the biggest hit here today, down about 1.1%. We had the Russell 2000 down about 0.5%, the S&P 500 down 0.4%, and the Dow still looking like it's leading, Justin, because it declined only 0.1% today.
Yeah, and I mean, for a while there, it was actually green. It was in positive territory. So it really does still seem like a market of, defense, industrial, not your typical growth plays. We have been seeing a lot of breakouts that immediately fail. That's still kind of one of the hallmarks of this. And we're approaching these levels of concern, prior resistance in a lot of the indexes. So you're looking at the NASDAQ right now, and this is having trouble getting above kind of that 11,500 area. We're right at a level that has been at 11,200, just above that, where we've seen resistance in October, back in July, June. This is an area that has been important for a while. And whenever you look at where you're at, and if you see recent struggles there, a lot of times look to the left and you can find, hey, this might be an area where there were struggles before. What was resistance hopefully becomes support. And if it doesn't, then it's most likely to become resistance again. Looking over at the S&P 500, that's getting closer and closer to that 200-day line. In fact, we were talking on the IBD Live today about how the weekly chart, we're kind of bumping up against that equivalent, the 40-week line on that index. So that's something to be aware of. 4,000 level is an area that we're also looking at there as another area of potential resistance. Looking for support there at 3,900. See if it can hold there. Going back to the daily chart, you draw that line kind of at 3,900, and you can kind of see that this is an area where it was hitting in a lot of prior points, and it did get support there just recently last week. So we'll see if that holds. But as you said, Allie, the story really is how the Dow Jones Industrial Average is showing a lot of strength. Remember, this is a price-weighted index, only 30 stocks. So it's great that this is above the 200-day moving average line already, holding that 10-day line for a good portion of this rally. But you can, certainly have just a few stocks really kind of make a big impact here. So that's one of the things that's been going on with the Dow Jones Industrial Average. Amgen, Boeing, just a few of these can really make a big difference on this index. And
how did Disney finish today too?
Yeah, I mean,
off highs, but still up.
It was off 6%. Highs, but still, that can wipe that can wipe away a lot of
stock,
damage when you've got that kind of action.
Right. Exactly. Okay, a quick look at small caps with the IWM ETF as well. Speaking of the 200-day, hit resistance there in late summer, and it's still battling for that level now, Justin, and it's not winning at the moment.
Right. This is just not where a lot of the focus is right now. I mean, it's just, it was looking stronger. It was looking like it could potentially lead, but then, like a lot of the indexes, as soon as it hits those prior areas of resistance, it starts getting into trouble.
Yeah, it looks like it's, holding, if we did kind of a looser channel, maybe let's see an even tighter one. It's kind of right there if you do a tighter channel. So we'll.
Now the trick here is this extra volatility. I mean, you see, the way that line is going, it comes up, and then, the pullbacks can be pretty sharp, and that just makes it tough to make any progress, because as soon as you start getting a little bit of a feeling like, oh, hey, maybe this is working, and you start seeing some breakouts, that's exactly when it turns. And
Mm-hmm.
it's that kind of action that can be very damaging to our portfolio
Mm-hmm.
because it's very hard to get in sync when that's happening.
Yeah, I feel like anytime individual growth investors try to get too aggressive in this market, we get slapped across the face with early entries. Take profits into strength. Don't buy extended. Don't buy breakouts because of exactly what you're saying, Justin.
Yeah. But on the plus side, as you pointed out, this at least is making some higher lows, so
Mm-hmm.
each of those times where it comes down, it is at a higher point than the previous time. So that is still kind of keeping this trend intact.
Mm-hmm. So yeah, early. Well, another case to be made for those early entries, but
Absolutely.
keeping up with the rotation and all of that too, and the Fed headlines, can be dizzying on
Hmm.
this, I guess, almost 1 year anniversary of the bear market. So
Yeah.
we'll
Right.
pour one out for investors over that. Okay, let's take a look at OTNX on MarketSmith, which is the 10-year Treasury yield, still below this 50-day line here, Justin. It looks like we'll go on over to the weekly. Off highs, of course, from a number of weeks ago, but it doesn't look broken by any means.
Yeah, it's still holding up pretty well,
Yeah.
and so that's one of those things where if this is just a little bit of a pause before it goes up again, then you can expect that to have some ramifications for growth as well. Usually, when Treasury yields are going up, because remember this is the yield that we're looking at,
Mhm.
when the yields are going up, that is a little bit tougher for the growth stocks.
Yeah, exactly. Which you can see this period here. Um, very apparent how that's been impacting the market. Okay, let's take a look at XLE, some sector action. Uh, Pretty, I don't know, wild
Yeah.
day in energy land due to some reports about what OPEC Plus is doing or not doing in Saudi Arabia, increasing production. So we did get a reversal here right at the 21-day line for XLE.
Yeah, but again, this has been an area that's been very volatile. I mean, a lot of us were looking at how well some of the oil stocks were holding up, and there's a debate. Are these, you look at the weekly chart. This has been one of the only things that's been working
Mm-hmm.
in 2022. Is it tired, or is it still? Hey, this has room to go. There's the
Mm-hmm.
concerns about recession fears, global recession fears. What does that do to the demand side of oil? There's questions of the whole supply side. We still have the war in Ukraine going on, and what ramifications does that have? Plus, as you noted, the OPEC Plus, what do they do? How do they manage this? Those reports that Saudi was going to up production, and then they denied the reports. So
Mm-hmm.
there's some extra volatility there, and that can be very tough to manage.
Mm-hmm.
I would say that a lot of the stocks don't look too bad. I mean, they don't look as bad as if you pull up USO, for instance,
Right.
which is an ETF that tracks the spot price of oil. That looks like it's in a bigger downtrend. But then you look at XLE or XOP, and a lot of those stocks look okay within the groups, and so that's kind of giving you a little bit of a divergent picture. We are still seeing, like in our growth 250 screens on MarketSmith, and a lot of these chart setups, that the oil stocks are still commanding a pretty strong presence there in terms of setups. But it is hard to imagine with oil, struggling in
Yeah.
that downtrend, that the stocks are going to do okay.
Yeah, it is interesting to see this divergence. And, when it comes to XLE here, we've been wanting a pause. We've been wanting
Yeah.
a pullback, and now we're getting it.
Mhm.
But at the same time as we're getting a pullback, we're also seeing strength and support exactly where we'd like to see it. So if, and that is an if, this theme can keep going, is this arguably ideal action at this point?
Yeah, I mean, the one thing I would say is I'd like for there to be a little bit less volatility, but with commodities, that's not always what you get. And also, it's important to remember that XLE, don't necessarily just use that as your only barometer, because that is very heavily
Heavily
weighted
weighted, yeah.
in ExxonMobil
Yeah.
and Chevron. So
Yeah.
Those two, XOM and CVX, hold a
Mm-hmm.
pretty strong weight, almost 40%, a little bit
Mm-hmm.
over 40% just with those two stocks. So yeah, you take a look at OIH, you take a look at XOP, and get, and some of the individual stocks to get an idea of where that strength is.
Mm-hmm. Yeah, and natural gas had a big day up today, but talk about volatility and
Yeah,
not in
right.
the direction you want to see it.
Mm,
That's what UNG natural gas has
mhm.
definitely been all about lately. Okay, let's also take a look at XLP, which had a nice day. Consumer staples. What does that mean, Justin?
That's defense, 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 right? And that's one of the tricks here is, you could imagine if this rally is going to kind of shift over to growth, where's that money going to come from? It's probably going to come from things like the consumer staples. So we have seen some of these staples have some volatility themselves. When the market has been strong, these get weak, and it's that sector rotation that can be very troubling at times.
Mm-hmm.
But it's also important, as I mentioned, XLI is another one to look at here. That's the industrials, and this is looking pretty strong. As an index, I'm almost looking at that 100 level as an area. If we can get above that, that might be showing some further strength. But I think the takeaway here is you look at a lot of the growth areas. They are still having trouble. You look at XLK, for instance, which is the tech sector spider ETF, and that's still below its 200-day line. So it's we're not out of the woods yet for tech and growth.
Mm-hmm.
Defense is still where a lot of the focus is, so you have to
Mm-hmm.
adjust accordingly and not be aggressive in this market.
Mm-hmm. All right, well, let's take a look at some individual stocks like YOU, clear, secure, strong move on earnings in some volume, and it's now going nice and tight. So we like to see that.
Yeah, I really like to see when stocks hold their gains from some type of catalyst, whether it's a earnings announcement or sometimes there's news. I mean, we saw this in some of the stocks, like some of the biotechs. Oh, you had a good, a good read on one of your clinical trials, or what have you. And when investors
Yeah.
can get comfortable with it at a higher level and it remains tight, that's just something that really looks attractive to me. So that's something that I think YOU, Clear Secure. Now, I haven't used them myself, but Allie, you've told me that you had a great experience when you were flying to New
Yeah.
York all the time,
Oh,
uh,
yeah.
zipping through the
Big
lines.
shortcut.
Yes,
It makes you feel like you got the Disney front of the line pass,
the fast pass, yeah.
Yeah.
So yeah, I mean, and whereas they don't really have the earnings quite yet, if travel is going to be opening up, if there's kind of this pent
Hmm.
up demand,
Yeah.
then this is something that could do better. And so it's, I think, worth kicking the tires a little bit on. It certainly has the revenue growth. We'll see if they're kind of
Hmm.
plowing that back into gaining market share. But it definitely, that tight action is something that
Yeah.
is looking pretty good.
Well, it's interesting about market share because I don't know of any other competitors other than TSA pre-check.
Right.
Um, so yeah, that
Well,
is
that could just be more of an expansion play.
yeah.
Hey, they need to get into more airports, right?
Yes, they do. They do.
Mhm.
Go come to RDU. But yeah,
Oh, now you're making it all about you.
I know.
YOU, right?
Yep, yep, yep. But it is, yeah, they lock you into, it's like an annual fee that you pay, and then it's like, I think, a little bit more if you want to add on a family member.
Okay.
They even have corporate deals too. So like, we could get a little discount, a little sweet deal, doing it through our corporation. So yeah, we'll have to see where they go from here, but we'll keep you on the radar. Take a look at ADM,
Yes,
and
ADM,
yeah, swing
Archer
trade
Daniels
today.
Midland. Yeah, we put this on Swing Trader. It got support at its 21-day moving average line. Now, look at this. This is something that had a cup with handle that, when it broke out of that cup with handle, I'll be honest, it was a little bit hard for me to
Yeah.
think of doing anything there. It just seemed a little bit like it had been running for a while. Plus, you had earnings, coming in there, and So it was tough. But now this is potentially giving a second chance. You didn't go up too much. You stayed within that 5% buy zone, just briefly got above it, and then a nice, very orderly pullback. You got support at the 21-day moving average line. So this could be another bounce here with future gains. Now, here again, this is one of those defensive areas. It's in the food, grain, and related. This does also have some volatility potentially because of what's going on in Ukraine. If things kind of get a little tricky there, or some of those trade routes are blockaded, or anything happens there, this might have some volatility because of that. If things go a little bit better than expected, hey, there might not be so much pressure on those prices. So it's worth keeping in mind that there's a lot of things that could affect this. But if you just look at the technical action, you've got some pretty strong looking things here, and not just on the technical action, but also on the fundamentals. I mean, look at those numbers. This has a 98 EPS rating. It's got some pretty strong revenue growth and earnings growth going back a ways, and a composite rating of 97. So this is kind of mixing a lot of the good on both the fundamental and technical side.
That it is. Thank you, Justin, for that breakdown. Last but not least, let's take a look at RBC in the metals theme. This one clearing a trend line within the handle. Doesn't look like it had volume today, but volume has been coming in on the upside.
Yeah, so let's just go back to that weekly chart real quick, because first of all, to kind of get this big picture, what I like about this is you had that big base, and kind of cleared out a lot of folks in that. I mean, that was pretty deep, right? For RBC, that was a 39% depth, and now here we have a much tighter base. So the next base here is just 23%, so much tighter. We're kind of right back at that same area. And then now, as you switch to that daily, as you pointed out, Ali, hey, we're starting to see some spikes in volume. Now, of course, I would have loved to see a spike in volume today, but that's going to be a tough ask right before holidays. We've got the Thanksgiving holiday. A lot of people have kind of checked out already. We saw some pretty light volume on Friday despite options expiration. So I think that's going to be one of the biggest challenges. If you're looking for these moves to happen on volume, that volume might be a tough ask right now.
Well, we'll keep it on our radar, because we've seen some other metal related stocks doing well, some steel makers. And this is in group 19 out of 197. So
right, another one of those examples of the industrial kind of getting a little bit of love lately. And this is not just a technical picture either. It also has those fundamentals. This is not as good as ADM. It's got